This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. It's a Friday morning and end of the week, and markets pretty much at the high point of the week, high point actually of the last fortnight or so. I'm Prashant, with me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi, good morning. Morning, Nigel. It's the last day of the week, right? And it's been good so far. I mean, given all the bad news thrown at the markets, it's still at a 1 month high, and there's been buying on dips.
Yeah, that's right. It's a Friday. What are plans for the weekend, guys?
Well, still formulating. Editors roundtable, right?
It's a long day.
I thought you guys would say watch Jawan. No? I'm looking forward to that. I'm looking forward to the US Open as well.
I've heard Jawan is
I mean, if it
expected to be really good.
If it does 75 crores, then, you know, as the screen is telling you, it's a bull market. The screen is telling you this is a blockbuster hit. 75 crores in a single day, and you still have 3 more days. So
actually,
and it's Shah Rukh Khan, right?
Yeah. That's not a bad idea. Jawan is perhaps.
What about the US Open? I thought you'll be tracking that.
I will. I mean, I think who's playing?
Shelton is playing against Djokovic.
Yeah. And he's looking very good.
I'm going with the underdog, and he's playing at home. Maybe he can do what Andy Roddick did 20 years ago.
Will he do the phone signing?
Yeah, I love it.
All right, well, let's just quickly take you through what you need to know as we begin another trading session. You've got the Nifty yesterday, which had a very positive and constructive close, right? We basically ended above 19,700 or so, and that's about 0.6% higher. You know, I'll tell you the significance of this in just a bit. We've been mentioning this 19,700 level for the last many days, and finally we are above it, and it's a decent close above it. Overnight, and for what it's worth, once again, it's a bit of a, you know, a lower session. Equities on your screen. Actually, the Dow ended higher, but the S&P was down, the Nasdaq was down the most, and you also had the Russell 2000, the small cap index, which was down 1%, a full 1%. So it was more down, and it was a equities down day. Dollar index is closed above the 105 level. Traditionally, typically over the last many years, dollar going up is considered bad for emerging market flows, emerging market equities, etc. But we find ourselves in a different kind of a situation. We can talk more about this. Fall in weekly jobless claims, which is the latest data which we got last night, is once again kind of stoking inflation fears. It's actually not just the jobless claims, but yesterday morning we were talking about the ISM services. Services inflation is sticky, and the ISM services saw a surprising rebound. So that combined with this jobless claims data shows that the labor market actually is pretty solid, and that is once again kind of reigniting fears that maybe, you know, there is more for Fed to do, maybe not immediately in this month when they meet, but perhaps later on. We got, you know, the big stock in the US market, which is Apple, which has been under pressure for the last 2 days. But that's nothing to do with the broader market, but it's lost 6% in 2 days. And that's the reason why the Nasdaq is underperforming in a big way. China it plans to, and this was reported overnight, plans to broaden its ban of iPhone usage, not just from ministries and government offices, but to state-run firms and agencies, etc. as well. So it's sentiment impact more than anything else. In terms of absolute numbers, they won't amount for much, but it's a sentiment. Brent oil, it's cooled off a little bit. I mean, oil's been the big one, but it still trades just under $90 odd. It was knocking 91, but just under $90 odd now, which is still very high compared to where we were about a month ago. But the market here has kind of looked through all of this so far, at least. Now, let's come to the Nifty and levels, etc., how they tie in. So the Nifty closed above the 19,700 level. It's a 61.8% retracement of the entire fall. So that's the sort of first number to watch out for. The all-time high, I would say, which is 200 points away, a little over 200 points away, is not 9991, but one is missing, but 19,991, which is the next logical target for the Nifty. Use 19,500, which is around yesterday's low, as a bit of a support in case you know, you get dips, etc. You know, buying and dips always the more advisable kind of game plan here. On the Bank Nifty, we've got some levels coming up. We broke out of the falling channel. We got a decisive close above the 40-day exponential moving average, which is was something we've been pointing out. On the way up, it's the retracements. The 50% and the 61.8% retracement of the fall from the July 20th high to the 31st of August lows. And the numbers are up on your screen. 44,985 and 45,312 on the way down. Use yesterday's lows of 44,207 as a bit of a support area. So that's the levels, but it's been super, super strong. And I would say almost we've got a thick coating of Teflon, right? Everything which has been thrown at the market's moved on, shrugged off, and kind of it's inching higher, it's moving higher. Directionally, it's looking pretty good. Mid caps and small caps, they took a break day before yesterday, but they were back up again, 0.60, 0.75% gains on both those two indices yesterday as well. Sonia.
Absolutely. I totally agree. And we were making this point earlier as well, right? Yeah. How give and take everything. This is a buy on dips market. People are choosing to jump in and take every opportunity they can. But before that, it's crazy what's happening in China with Apple, right? Yeah. I mean, earlier they restricted people from bringing iPhones to their offices. Government officials can't bring their iPhones. Now they're saying they're going to extend it. Apple has wiped out $200 billion of market cap in just 2 days because of this. I mean, it's really random. So, and it's interesting to see how this plays out as well. And that's, of course, the big global headline.
It ties in, Sonia, with China did the same thing with laptops, foreign-made laptops again. I mean, it's basically the entire thing. I mean, US is restricting export of high-end chips to China. Yeah. China is saying we're going to build our own chips in a very large way. So it's.
But imagine people who pay so much to buy that iPhone and then you can't even take it off it. What do you do all day, right? But okay, anyway, this buy on dips is something that does continue. And yesterday our markets closed at a 1-month high. It was the 5th straight day of gains. And what I really liked about the market so far is that it's been led by large caps. So whether it's L&T, HCL Tech, ICICI Bank, there's buy on dips and it's seen in the large cap arena, HDFC Bank, etc. Now, the mid-cap index is at a record high, so there's plenty of buying action there as well. However, the flows just for yesterday have thinned out a bit. So you have the FIIs that sold about 750 crores. DIs barely bought about 30-odd crores. The US markets, they closed mixed, but the Nasdaq was under pressure. And for the week, most US markets are under pressure. So you have the S&P 500, which will end the week about 1.5% lower. Of course, there's a lot of Fed speak over the next couple of days and weeks, and hence the market is a bit tentative as we head into that US Fed, reserve event on the 19th and 20th of September as well. The Asian markets also not looking that great. The Hong Kong markets are not trading today. The Japanese markets are under quite a bit of pressure because the economic growth was slower than what the street was estimating. So by and large, it looks like it could be a little bit of a slow start from the global perspective, but for our own markets, things have been very strong. So let's see, maybe that buy on dips continues.
Well, absolutely, Sonia. The trend is up, so you need to participate on the upside, irrespective of what is being thrown at the bulls. Well, they are battling and they're charging towards it. So you need to, the screen is telling you that it's buy on dips. And if you saw yesterday, the Nifty did pretty well, but the Nifty Bank, the intraday chart should tell you the picture. That, in fact, was the big booster shot that we got midway through the trading session. You thought, well, it's underperforming. But that came back to the party and it did very, very well. There were clear signs of short covering on the Nifty Bank, by the way, because it gained more than 1%. And in fact, the open interest was down by close to 2.5%. So short covering is what played out on the Nifty Bank. While on the Nifty, there continues to be long addition. There are a couple of cautious sides with the VIX moving a little higher, the PCR moving at the higher end of the range. But just going by the screen, you'll have to say you need to stay long on this market. And the Nifty Bank, for the first time in 8 sessions, we have an outperformance coming in from the Nifty Bank. It conquered the 50 DMA as well on the closing basis, so it took out that crucial level. What are the FIs doing? Well, yesterday there was a swing of close to around 17,000 contracts. How do I say that? They added 9,000 long contracts and they covered 8,000 short contracts. And now the long positioning has gone to around 57%. I'll tell you what, since the 27th of July, we haven't seen the FIs be this net long on the index. So that's an important point. 57%, they're expecting the markets to move up from here on as well. And on the option side, well, on the Nifty, 2 strikes are important, 19,600 put and 20,000 call. Out of the money call buyers, they're saying maybe, in fact, the Nifty is going to be making its way to around 20,000 odd. So take a punt, pay 10 rupees odd, and maximum you lose is around 10 to 12 rupees. But on the downside, 19,600 did see 40 lakh shares getting added. The rough premium there would be close to around 50 rupees. So you deduct 50 rupees from that 19,600. 19,550 is important on the downside, and you have the 50 DMA that comes in at around 19,500. So that's a crucial support zone. On the upside, well, it's 20,000 is what the bulls are looking at. And since the Nifty Bank found its form yesterday, the next level of resistance comes in at around that 45,100. That's from where the Nifty Bank did a U-turn. In early August, we hit that level, and then we went down all the way to around 44,000. So that 45,100 is important. We have conquered the 50 DMA. That becomes a bit of a resistance zone. If you break that, then maybe the 100 DMA comes into play. But you'll have to stay long on this index. The Gift Nifty is suggesting 20-25 point uptick. Stay long, trail your stop loss, and 20,000. That's what the bulls want. So let's see how soon we get there.
Okay, well, that's basically what all you need to know in terms of the overnight session, the positioning, and the trade setup.
It's interesting we talk about the markets sort of by the hour, but if you look at it from a broader perspective, we are not even 2% away from that 20,000 mark yet again.
Yeah.
Just back at lifetime highs yet again. So I guess the bulls...
I forget, did we hit 20,000?
No, it was 19,999.
19,992 was the all-time high.
992, okay.
8 points away.
Well,
but let's not talk about the Nifty Bank. Portfolios are feeling so good.
Yeah.
The real party is
Mid-caps,
in the mid and the small cap space, right? They have got their
I think
dancing
Nigel wants to jive a little bit. I mean,
Nigel's in Friday mood
That's
today.
later this evening. It's September, always a good month for me.
all right, well, let's quickly tell you what's lined up here in the first half hour of the show before we go any further. Markets across the globe and global sort of views coming in. Rana Gupta of Manulife Investment Management will be with us. Our research team brings you the top stocks to watch out for in a bit from now. And our fundamental stock analyst is Gurmeet Chadda this morning of Complete Circle. And he'll be with us at 8:30 a little later.
All right, well, let's begin the day on the equities front. We have Chris Wood at Jefferies, and very important comment coming in. He says the first Physical Asia Forum in Hong Kong is this week. Greed and Fear observes the long-term conviction amongst Asia and emerging market-focused investors that China remains a structural underweight in equities and India is a structural overweight. So he's bullish on India. He says still tactically there is a widespread acknowledgement that India has already done well in the near term, while the possibility of a renewed period of China outperformance is rising.
Okay. Just to continue on equities, Aditya Suresh of Macquarie says that India's relative valuation against other emerging markets remain expensive even as its EPS growth and ROE premium is in line. They note a strong correlation plotting MSCI India against rolling 2-year forward consensus EPS. The current index levels appear more palatable following consensus EPS upgrades post-June quarter results across sectors like financials, discretionary, energy, healthcare, industrials, and as we roll into or onto a higher base.
Okay, let's also get you some money market views. Lakshmanan V of Federal Bank says the firming up of the US dollar index owing to rise in crude prices and elevated US bond yields is exerting pressure on G7 currencies and the Indian rupee. He says yesterday the rupee closed at a record low of 83.21 while the Chinese yuan was trading around a 16-year low. He expects the rupee to trade in a range of 82.85 to 83.68 for the next few trading sessions.
Okay, on bonds, we have Lakshmanan weighing in saying rising crude prices and economic data is keeping U.S. treasuries at elevated levels. He expects the 10-year benchmark bond to trade between 7.1 to 7.25 in the next few trading sessions, with value buying expected at the higher end.